Hi guys, I hope everyone is doing well. It's been a while since I analyzed the market because there was something happening in the market that I personally didn't want to be a part of. So today's a new week. Today's Monday the 6th, and I haven't traded in the past few days. So now we're going to look at what to expect in the upcoming week. So as you guys can see here, let me go to a 4-hour time frame just so that you can see what we had anticipated the previous week. So luckily I was able to catch this trade and I made a few dollars on this trade, but I was definitely not anticipating this move that we see here. I was more anticipating that the market will get here and then push to the upside. As we can see, that was not the case. So I'm gonna try to remove some of so that we start on a clean slate. So I'm gonna try to remove that. But that's also the beauty of the market. You can see one thing and something else happens. So that's the reason why we have entry edges, right? So here, the reason why I did not take a buy, it's because the momentum was heavy. As you can see, this downside was extremely heavy, and I didn't want to trade against the momentum or the volume of how the market is moving, right? So as you can see, we are going to have our new psychological level, right? And we have been seeing that the difference in our psychological level is 20,000. So basically, I'm just going to say 280 minus 20, which would give me 260. Right, so I'm going to go to my coordinates and change that to 60,000. And as we can see, the market has been, what's the word? Sensitive around this area. As you can see, the market has been respecting this area very well. And I'm going to do the same thing and draw another psychological level at 240. That's 260 minus 20. And we can also see the same pattern, right? We can see the same pattern that the market is indeed sensitive on this area right here. So just to keep it clean, I'm only going to be focusing on 200 in this area basically. So this is my current playground, if I may explain it in that way. It makes more sense that way. So anything above 280 and everything below 240, I am not going to look at, right? So now it's all about thinking. Okay, so since the market got to my latest psychological level, matter of fact, let me remove these psychological levels that I'm not using at the moment. And once the market breaks above 280 or below 240, that's when I will then bring them back. But just so that we keep our charts very clean, I'm going to remove them, right? Since we can see that we are in a downtrend and we saw that the market broke the 260 psychological level and it tested it, it might mean that the market is going to 240, right? So we have two possible direction that we can expect, right? It can either be that or that, right? So those are the two possible moves. But since we can see that the market is heavily in a downtrend, then we can remember we don't want to trade against the trend, right? So let us focus. I mean, on the bigger picture, if I move to my daily time frame, say that we start from here, we can see that it has it's creating high highs and high lows, but at the same time, looking at from this area right here, we can see that the market has been going down, right? But then the thing is, we don't know until when, right? Perfect. So I'm gonna focus on my 4-hour time frame and just look at currently what is happening in the market. So the move that I thank God I avoided was this one right here. No, it was not this one. But then something was happening here and I couldn't get like a clear indication as to where the market is headed to, right? And usually in those cases, I feel like that's the beauty of using psychological levels, right? It kind of gives you an idea of where to trade and when not to trade, right? So if you have like an indication of where the market is headed to and is within a specific psychological level, that's a very good area to trade. For instance, here, right here, this move right here, this uptrend was a beautiful one to trade, and this to 300 was also a beautiful one to trade, and also this sell, because you saw that the market heavily broke within the psychological level of 280 and 300, and then it came back to retest that psychological level, and then it sold. So having to see such patterns helps, so you know when to trade and when not to trade. And the moment you get to a psychological level, then you exit and wait for the next move, so that you know, is the market continuing with the trend or is it reversing? So you kind of have an overview of what the market is actually planning on doing, right? Perfect. So we see here that the market broke our 260 level, and then it retested, and then it's kind of going down, right? So we can expect to see something like this until it gets to this level, right? So that's one possible move. So one thing I also wanted for us to look at, I'm going to switch to my 1-hour time frame just so that I can see why exactly the market turned where it did, right? So as we can see, we have lower lows, lower highs, lower lows, lower highs. Let me try to draw those out. We have our lower low, our previous lower low, our lower low here as well, and then the market started not giving like clear indications of where it's going and all that, right? And then we had one here again, right? And we had one here again, right? One thing I wanted to show you, or one thing I wanted to mention, is that if the market breaks the previous lower lows high, basically this one right here, as we can see, the market broke this level, right? Remember, this is basically what I did mention. It's part of what I do to take an entry, but looking at what we have now, this is on a 1-hour time frame, and I usually look for this pattern on a higher time frame, right? So it's basically, we have this. Let me do it this way. Like that. So basically we have the same thing. What I'm saying is that if we are in a downtrend, and then this is my previous lower low, and then let me lower low, and then I have another lower low there. If the market breaks the previous lower lows high, basically this is what we call change of character. Other people call it church, but whatever works for you, that's fine. Yes, basically that right here. So a lot of people take entries they would buy here, but then personally, with my experience and also what I've seen a lot of traders on here on YouTube say or do, is that the market usually breaks above this change of character, and then it goes wherever it goes, and then it usually comes back to test out it's gonna leave an order block or a fair value gap. So this is usually how I would take my trade. But remember, this is something that I usually do on a smaller time frame. And I'm currently seeing the same thing here, right? So basically, this is my lower low right there. And this is my change of character. Change of character. And we also have my new lower low as well. So this was my previous higher high, and then we can see that the market broke this area right here, and then the market is coming down. And then when it does that, then the next thing that I would do is I would go back and look for where I have an order block, right? So I can see we left an order block here, this black candlestick, before we had these big up moves. And if we can zoom in, we can see that this order block was not tested. So initially I thought maybe this candle was the one that tested it, but then I can see that this it did not test it, right? So two things could potentially happen, right? So if indeed the market is confident about continuing to the downside, then it will invalidate this order block. So this order block would potentially not hold. So let me say order block or entry point of interest, POI. POI basically means point of interest. So I am interested in this zone right here, right? So like I said, two things can happen. The market can indeed do this and then go to the upside. And when it does that, I will look for my next order block. Where was the last order block that we left? So the last order block that we left was here. So it means that this would be my new target, right? If I'm gonna buy here, then I'm gonna exit the market there, right? But remember, this pattern that I have drawn here is what I will initially look for before I actually take my trade, meaning that I'll go to my 5 minutes time frame and wait for this pattern to hold, right? But if that doesn't happen, then obviously the market will break this level right here. And one thing that we will expect is for the market to come back, because it left a fair value gap. Where's the fair value gap? This is our fair value gap. So it's a win-win situation. It's all about being patient in on this trade. You wait for the market to give you something and then you execute, right? So here is our plan. I'm gonna do a bit of rundown to conclude what we are anticipating to see this coming week. So this is what I'm seeing, right? So this is my fair value gap, right? Or sell entry, right? I'm gonna change the color to red to show that okay, we're planning on selling. Okay, and then we have our order block and buy entry, and then I'm gonna change the color to green or blue to show that okay, if I'm actually to buy, then this is what I'm looking for. And then if the market invalidates this order block, then potentially I'm looking to sell. And then how am I going to, like, you're now you're being open-minded about, if the market doesn't give me this, then this is what I'm looking for. I think that's how I approach trading. I don't just stick to like one thing. I'm open. I open myself to seeing different things within the market, right? And I'm just gonna quickly check the reason why the market might have turned here might be because of a Fibonacci 61.8 level of our Fibonacci. So I'm gonna run it from my previous higher high to the lower low, and then if this area is between somewhere around 61.8, then it will make sense why the market actually turned where it did. So this is our lower low, and then as we can see, it actually indeed did turn around that area right there. And then usually my take profit is at 23.6%. So if I take an entry around 61.8, then my take profit is around 23.6%. As you can see, the first time it missed, and then it continued going up, and then now that's when it actually hit the take profit. So now it's a matter of waiting, right? Now the only thing that's left is just for us to wait for the market to play out. But as we can see, the market is actually almost at our level of interest. So I'm also gonna try pulling my Fibonacci from there to my highest. Let me see if we did it this way. Then we can see that if someone was actually looking for buy, they might have missed it by a few pips, potentially missing the trade, and it came back again. Yeah, it's still around that area. Remember, Fibonacci doesn't necessarily mean that the market is going to indeed turn exactly at the 61.8 level. It can pass by a few pips to catch those people who are always looking to take entries exactly at the 61.8. So anything is possible. Anything could happen in the market. So now, just so that I keep my chart clean, I'm gonna remove some of the things that I don't need. Yeah, so I'm gonna remove this as well, right? And I'm also gonna remove that as well, because now I have an idea of what exactly it is that I'm looking for. Other people can be like, oh, okay. Personally, it's been a while since I traded trend lines. So yeah, someone can have that and that as well. So obviously it means someone might have taken a buy here, looking for the market to turn there. But then this is another reason why I don't trade trend lines. But also at the same time, what I've known or learned about trend lines is that they become invalidated once the trend line touches the market touches the trend line 3 times, right? So we have 1, we have 2, 3. I mean, it didn't necessarily touch, but you guys get the idea. So I'm just gonna remove that so that I keep my charts very clean. But yeah, so we got our order block on the 1 hour time frame, and then we're just waiting for the market to tap into it. And when it gets to the order block, then we wait for our entry pattern or entry edge to potentially come to play. So I'm gonna draw the entry edge for you guys again. So we're expecting the market to break. Okay, sorry. Let me do this. We're waiting to see something like this. And then the market taps into it. And then the market is going to leave you. I know sometimes you might feel like I missed the trade. But then taking an entry here is very risky, because if you take an entry here, what if the market goes down? You understand? But if it leaves you, and then it leaves an order block somewhere here, and then it comes to that order block, then you don't risk as much. I feel like that's also another reason why I'm able to like take or rather trade like very small accounts, because I am not a sniper. I'm not chasing against sniper entries. I am more risk averse, meaning that I'm trying to minimize my risk or my losses and optimize my profits. So instead of always trying to like trying to get like trying to get like sniper entries and all that, be more smart, because this is the money that you worked hard for. So no one is going to applaud you for taking a sniper entry. So yeah, basically this is what we're looking for when the market potentially hits or gets into our order block. I hope this made sense. Don't forget to like and subscribe and leave comments if there is any other topic that I've mentioned that didn't make sense. Love you. Bye.